Bang, bang. Yeah, we'll see what we get here. So obviously we're in this consolidation still. We spoke about continuing this for today. We're at last week. We don't have any high impact news today, but we'll still kind of just going to hang out, read price, see if it does want to print something favorable. Let me kind of show the drawings that we were using. So for those of you that weren't in the weekly recap yesterday, we spoke about the fact that we've used this 1 hour. So we're on the 1 hour chart, right? We've cleared a short-term low here. Most recent short-term low cleared. We break structure at the high, and we've left that 1 hour fair value gap. So now we've come into it twice, right? And notice that we gave up consequent encroachment here, but we still held the low. I would like to see this hold, right? The fact that we've came down lower, repriced into it, close above, should be balanced. If we start revisiting it, especially closing below it again here during the actual session, then we may actually want to get underneath, revisit daily volume imbalances, and just kind of continue that choppiness. Although we have those higher time frame buy side targets, or let's take a look quick on the 1 minute. Just want to see what we do with the opening here. Sell side here. We're inside the new week opening gap right now. 830 level was within that new week opening gap. Look how close to midnight. So lately the midnight and 830, we've been seeing this a lot. Are very closely aligned. That right there is just another signature of that consolidation market. Because right, 830 is opening and we're spending an hour, or excuse me, midnight's opening. And by the time the 830 gets back to it, we're still opening right near that price. So just a sign that we continue to consolidate around the midnight level. We now have a new week opening gap here though, and the 830. So seeing that, we might actually just stay here all day, and that daily volume imbalance. And we're already inside the 1 hour bearish fair value gap. Okay. What's the 1 hour? Also 1 hour. New week opening gap. Fake Judas swing, couldn't get underneath any lows. Overtake the bearish fair value gap that was aligned with consequent encroachment of the hourly. Volume imbalance above the daily. Potential, right? This was the Judas swing here. Notice how there's two volume imbalances here. So this is a volume imbalance and this is a volume imbalance. But the actual daily volume imbalance is also right there. Right? It's all the same level. So that's kind of what we speak of when we say when the time frames over mesh like this, align with one another. That's when you get the most sensitive price. At this point, we've only done that volume imbalance entry, right? So we barely tap this inversion, volume imbalance entry, hold the daily. Rip it now for the relative equal highs. Because in this sense, right down here, this low ran this low. So this low has already cleared liquidity. Whereas this high, right, we have a failure swing here. So no liquidity has been ran. That highs would kind of be the next, we'll say target if we want to get into liquidity. Because also look to the left, right? I drag this to the left, boom. Perfect equal highs. Wait, I'm tripping. Why does that line look straight? Oh, I was tripping for real. What the hell? I was like, yo, this line looks not straight for some reason. Is that just me? Shadow trade, geez. Yeah, someone had mentioned that someone named that is kind of trying to scam. Goomba had mentioned that. Which I don't know how. Like, I can't do anything about it, which is tough. I guess besides tell y'all don't accept it. Don't fall for it. So I like this actually, fair value gap here. Buy side seems to be the objective. So if we're going to tap quickly into this fair value gap, this at the lowest, because I mean, this is right, the 1 hour perfectly aligned consequent encroachment paired with 1 minute inversion, 1 minute bullish BPR. But we did create that volume imbalance as well. So at some point in time, I would expect this little area in price will want to be traded back to. Probably after buy side gets hit though. Buy side, buy side. Oh yeah, I gotta turn my. Yeah, we'd want to see ES catch up to that as well, though. Not ideally, I'd want to see that. Because even though ES did run it, right, it's not going to be guaranteed SMT. ES can, or NQ can continue to run. Especially because it cleared its old previous high, right, finding support. We want to see ES catch up. More of a six sister rather than an SMT here is what I would look for. Might not even get back into that fair value gap. That's fine though if we leave it as a breakaway. Just run. Run straight for the high. So because we got back above this little hidden volume imbalance, let's kind of see if that would want to be what holds price if we're going to get back above there. I mean, that's beautiful. Jeez. So right, that's what we use. The volume imbalance that was hidden here as we enclose it. Still important if we're going to get back up and through it. This candle returns right into the high. And then we engage the equal highs here. So now we've cleared the buy side. NQ still way ahead. I want to see if we create a fair value gap getting through this buy side. Right, previous day high here. Buy side as well. And then that hourly wick buy side that we were talking about last week. Oh my gosh, get the high. Bruh. There it is. Jeez. But we'll see if it's, let's see. So we did close above it. We do have another short-term high here. So we want to be wary of that, right? We understand what we're reaching for. There's buy side again. And then there's buy side here. Like this. So we've cleared both of those. We'll probably, if we can leave that open. Clear lows. I'm like, I don't want to be too ambitious for the breakout just yet. But we're opening with some strength this morning. This is that other buy side. So we have equal highs. We've cleared this one. We get up and through that with the fair value gap. So this is, I mean, look how the fair value gap, the consequent encroachment of their fair value gap is the buy side pool. So perfectly aligned there, which makes me think I'd want to see this. If we were going to actually continue higher, I wouldn't want to see this giveaway. To where if we got underneath that, right, we're going to revisit this more than likely. And probably come back just into this area like we mentioned. Right, we have equal highs now resting above buy side. So this is short-term buy side. So really for me, I'd want to see really this be the lowest that goes. Whoa. If we end up creating a wick here, leave that wick and just run for the highs up here. And now we get through it. All right, equal highs, hesitate. Maybe engineer two equal highs. Bam. And there's that buy side. Yeah, it's pretty. Okay. So far, we got pretty price action. Now we're volume balancing above it. So we'd watch that volume imbalance entry, tap to close. That is precise right there. Where else? We have on the 1 hour. What's the wick here? If we go like this. Okay, yeah, that makes sense then. This is consequent encroachment, 1 hour wick. Reach for that. Or the line just moved barely. This is consequent encroachment of the 4 hour wick. We'll try that. higher time frame right next to the 1 hour. So if they're aligned like that, more than likely they're both want to be interacted with. Da 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 da. We held the volume imbalance though on that daily. Shortened trading week. Okay, so actually, the fact that we're moving like this. Let's see, that's the old buy side. There is a fair value gap right there. Right, look at that fair value gap. Very interesting one. Because we open with a volume imbalance. And then we wick higher, and then we actually close on the close of this candle. Oh my goodness. All right, we're just nailing our targets here. So that's that consequent encroachment level. I don't know why the line is, oh, okay, it's gonna extend forever. So at this point, consequent encroachment level may be retraced back into, let's see, nothing on the 2 minute, so maybe here. We're sitting on the old high still. But maybe we come back for a slight retracement. Buy side, equal highs. Look at that, equal highs with fair value gap. Now we do have a lower fair value gap, but let's say we want to push for previous day high. Most recent discount holds us here. This becomes breakaway gap. Wait, breakaway gap. Yeah, okay. Measuring gap. 1, 2, look at that, right? So this one, because this fair value gap was left open, that's the breakaway. Next one here, measuring. First one hit easily, second one, candle stops right at the exact level here. Third one, aligned with consequent encroachment, right? We wick into that barely now. Fourth is probably right here, actually. I don't know why I don't have it on. Oh my, yep. Fourth is previous day high. So if that's the case, let's go back to the 2. We actually would, right? We would want to see this one hold. This one would have to stay open. We want this to stay open. Don't even come in here. Hold here where we were kind of looking for. The most recent discount on the 2 minute aligned with the old buy side perfectly. Overtake this high, get above consequent encroachment, use it as support, go into the fourth. Shit, and then maybe get for the actual high. Pretty bullish. Right, this one's the 2. That one was clean. That becomes breakaway, measuring. Don't want to see those. Fourth. Quick apex horror, let me hear it. Yeah, we're just vibing. No trades probably today. Although I had my limit set here, brother. I was biting on it. When I missed it, I was like, that's a sign. That's a sign I'm not supposed to do it. Because that shit hit perfectly. No, it's just sometimes, right? I literally had it. It was exactly that level. So just the spread didn't get me in, even though there's barely any. Price spiked in your direction. Damn. So that would have been bans? You tell me if you went in with 9 contracts. You're hurt. Oh, fuck. That's not funny. Sorry, it's kind of funny. Damn, brother. That would suck though, for real. I'd be pissed if I was you. This is why you have to record your trades, man. Because I've realized, right, one time, get this, on this account I have the static ones. I had taken a trade, had seen it go to my target, right? Got hit. It was like a $257 profit. Some light. See the execution symbols, all that. I go back in at the end of the day, just gone completely. No executions, no P&L, no trade history. So I was like, what? I know I'm not tripping. So at that point, I just, if I'm taking a trade, I'm recording it. I can't trust them. I don't know if it's Tradeovate though, or this has to be Tradeovate itself. Damn, brother. It does, brother. So what, you're gonna try to get it back though, B? How many accounts did you have? You had more than 3, no? Oh, you only had, damn, so you lost all of them. Wow. That actually sucks. Top step. Yeah, try top step out. That should be cool. Payout rules pretty simple. They got pretty low payout, I guess, percentage, but that's only for a little bit, no? You only get 50%. Oh, yeah, okay. Did you pick up a few then? Hitting that again. At this point, right, 2 minute here, I would want to see hold. So this swing low, I would not really want to see this swing low broken. If we break that, we do have a 2 minute here, so I guess we could still use this. Because right, we've cleared the buy side, so maybe retouch. Like if we check at a 5, mitigation block. I mean, ideally, yeah, we hold the actual. Because now we have that 5. Look at how that 5 minute volume imbalance is aligned with the buy side. Kind of want to see if the 5 minute bodies can hold that. So that's that 5 minute transposed here. Lower time frame, seeming to use it as resistance though, not the best. Lean in. Equal lows, equal lows, equal lows. 2. I mean, 5 minutes still there. 2 minutes till the 5 minute closes. No, I don't think we got in there. That's what I got here. Wait, let me put, we tapped it though perfectly. That's what I got right there. Rhythmic, or you use Ninja. Ninja Trader. 1 minute. So whenever this next 1 minute candle, right, this candle here, when this closes, that'll determine if we hold the 5 minute volume imbalance. Which we would want to see, but now we have, if we were going to go lower like this, ideally we would have stabbed into the 5 minute fair value gap. So we could have at least touched it. Because now we have equal lows sitting just above that level. So we've closed back underneath it. If we're going to do that, these lows here probably will want to get ran. Although we want to hold this on the 2 minute, right? That's where we're kind of conflicting. This volume imbalance here has been overtaken. We wanted to see the 2 minute hold, which it's doing. So that is ideal, right? And the 1 minute is kind of holding it as well, which is nice. The only thing causing us a little hesitation is the 5 minute. But I guess if we can really overtake, like if we can get back above that volume imbalance on this candle, right? We can give it like that one candle's opportunity to overtake it again. We would still look for that to hold. Equal lows don't always have to be ran. They could always be left for now if we want to run this high and then return into it later. Right, that would be the possibility. Because yeah, bodies are holding that pretty aggressively. And we've overtaken that fair value gap like that. Right, notice the bearish fair value gap that was holding us. We overtake. Did we get above the volume imbalance? We did not, but we can use it as support because we close on its high. And notice how that candle's low is there. Equal highs here. So still, previous day high would be nice to see. Right, we're starting to consolidate. We've had the expansion. Consolidation following. Nice. Yeah, that's what we want to see there. Up and through is nice. I'm thinking if right within this leg now, so we create the breakaway. If this becomes the measuring gap for this price leg we're within, one standard deviation aligned with previous day high, right? Take the original measuring gap we use, that's the fourth. So we're starting to see all these levels align here, which is why we're looking for that, right? The 2 minute held us nicely. So at this point, we would expect these equal lows to be taken some point later, right? Maybe after clearing that high. But for now, we would want this structure to hold us. So we can leave the equal lows in place, that's fine. Right there, that's holding. Right, we spoke about if we can get above the consequent encroachment, we would want to see if that could offer us support now into the old high. They don't understand. So back into all the inefficiencies here. This is really the lowest we'd want to see it go. But if we start attacking those again, these lows may be in question before we actually get into that high. Not really a fan of how we just kind of gave up that consequent encroachment level, even though it's on a higher time frame, right? We do have a 2 minute here that we can be kind of returning into. Does nothing on the 5 minute. The 5 minute candle's actually been wicking that consequent encroachment. So the 5 minute is kind of refusing to get above it. Right, look at that. 5 minutes all wick. 2 minutes holding. 1 minute bearish volume imbalance, however, inside the new volume imbalance here, or the old one. So if this volume imbalance stays open and we now overtake, right, this low, this fair value gap, yeah, lows more than likely. Because we cleared the equal highs. We left new ones here. For higher prices, we'd want to see this hold still. Kind of negate the bearish volume imbalance. They don't. These equal highs here are kind of what we're looking at. So we'd want to see, that's better right there. Pretty. All right. Should smack into that high. Oh, yeah. That's beautiful. Right through it, see if that ends up being a high or if we give one more little push. Da, 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 da. I did take a long that we are in right now off of that fair value gap. Right, the low of this volume imbalance. I went long there. So now we're just seeing if we can't get into this high right here. All right, that's just 5 handles for my entry. That's the reason I'm having that. I took a partial at the high because that was our target. So now we're just seeing if we can actually close this out at the high here. Which should be, right? We had that volume imbalance, which should be pretty good for us to hold. Hell yeah, boom, so there we go. So I ended up actually capturing something this Monday. Right, we have this buy side that we're aiming for. We hit that. Nice. So yeah, once we were confirmed that we were going to move away from this 5 minute here, right, that comes here with this candle. Once we confirm that rejection from the 2 minute, holding it, breaking structure at the high here, closing above, right, that's important. We close above first. Only after closing above do we retrace. Like I mentioned, I'm using the low of this volume imbalance right here. So basically the low of the 2 minute. So as we hit that, I go long, stop right underneath this fair value gap really. We had no reason to return underneath that. So it was a pretty tight stop. We got kind of close, but I mean, not really too close. Right here. So just underneath this volume imbalance that was there. And as you saw, our target just became really that buy side, partial at the old daily high. And now we missed the swing high though, exit. Caught the swing low, entry. Could not catch the swing high, exit. Man, see, that's the stuff that pisses me off. Not a bad Monday. Right, we were kind of expecting consolidation, but as I kind of often mention, you don't want to force your bias. So if price is obviously showing signs and wants to move somewhere, I'm fine jumping on board, taking it. Once again, kind of in the middle of the move, right? This is the target. The move's been established. We capture the middle of that move into the high. So now we can chill for sure. We'll be good with that for the day. At this point, that is the buy side. If we're gonna run, this low should hold where we entered. Right, I'd look here. So we've met our deviation points. 4th, 5th. This is the 5 minutes. So say the 5 minute measuring gap is what we're using now, right? Second standard deviations all the way up here. So we'll leave that. We'll clear this one because we've kind of met all the targets we had for that leg. Yeah, we'll see what we get now. Hey, no problem, dog. I'm glad that you find them beneficial. But yeah, volume imbalances are a powerful tool for sure. And not a lot of people seem to speak about them too much, which fine with us. So now, right, we create this volume imbalance aligned with the fair value gap. We've now created another bullish. I don't really like when they're this small. If they're this small, I'd kind of want to see price move away from it quickly because ones like this can tend to be traded through back and forth. we've hit the low of this fair value gap, closed above. So if we really are going to hold from here, right, this low should be protected. We do have a lower one here now. This baby fair value gap paired with the wicks. But for us, say that we want this kind of extreme bullish delivery to continue, this stays open until at least this high gets cleared, and then maybe go for it. Mama said, Shabba ranks. Shabba. Oh yeah. And that's what we'd want to see right there. Right, we hold like we mentioned. We move away quickly from the newly formed volume imbalance. That's what we want to see. If we're going to create a tiny one like this, we want to leave it. We don't want to spend much time playing around it. We've cleared this high though. So now because we've cleared this high, that's when we may see a potential, right, deeper retracement. This low held us into the buy side as we were looking for. If we want to continue to push, however, right, then we may need to do something where we kind of create an immediate rebalance here. So we've just hit this candle's high. If we want to keep pushing, I would actually kind of prefer to see price just move from here. Right, it can't get above this range. If we come back into the range, revisit the fair value gap, maybe we come down for this one, but in my mind, if we want to just continue straight with the bullish order flow, we should just keep pushing through this high. The 5 minutes wicking though. So the 5 minute can wick. The 2 minute immediate rebalance. BPR volume imbalance. I guess we can give this another try here. Volume imbalances aren't one and done. So because we don't really have any other PD arrays besides this one, I'd still kind of focus on that volume imbalance there. at this point, because we've already cleared, honestly, we cleared the objective I kind of had for the week in a way, which was last Wednesday's high, so last week's high. So Monday gave us pretty good delivery, which I'm glad we ended up streaming it here, sitting in with y'all, right? Captured something nice into that buy side, holding criminally all the higher time frame discounts we were speaking of. But at this point, I'm interested to see if we want to expand, right? Are we going to finally kind of expand out of this range we've been in? We've been looking for buy side this whole time. That's never really changed. So if we can start moving away from the consolidation, right, we might start trending again just into our next buy side targets, which would be nice. Volume bounce holding there. Which trading view plan? The basic. Now get the at least multiple. I can't remember which ones there are. I have the one just underneath the seconds time frame. So I'll probably have plus. Yeah, 30-second data is cool, but I mean, at this point, I can really see seconds time frames within the 1 minute candle itself. So I don't really need to look for at the lower time frames under any 1 minute anyway. Oh, for the sale? Shit, got to. If they're $1, just get the highest one. That'd be the best one. So once again, right, we hold the volume balance into a high again, but notice how we're not closing above any of these highs. So short-term high cleared there, short-term high cleared here. Look what we got here now, though. A little baby fair value gap. See if that plays any importance in price delivery. At the time, though, 1, 2, 3 drives equal lows. This gives way. We go back for the equal lows and the old daily high. You said the 3 Indians. Yes. Yes, you do, brother. To get live futures data, CME. Yeah, I don't really look at YM at all. It's only $4 a month though, brisk. That's not bad. All right, so we're looking for these lows here because, as we mentioned, that's that 1, 2, 3. We give up the fair value gap here if we get that, right? Take out the lows. Maybe back into this fair value gap to aim for the second low. And then maybe the third at some point. If we're going to retrace back into the range, right? Because we've swept now a daily high, a weekly high. This here is a weekly high. So we've swept a weekly liquidity level. This is when we can expect now retracements, okay? So we're really extended in this range. I wouldn't really be trying to look for longs anymore at this point until, right, we had some type of huge displacement above. Right, you see we don't really displace above this weekly level at all. So until we can do that, I'd really be looking for short-term sells back into the range now. As we speak about, right, kind of the buy side here of the curve. So now if we want to start going lower, we have a potential sell side. If we continue pushing, that's fine as well. Right, we'll just need to wait for more price action to kind of confirm an entry or something like that. I can eat one less brisket. Not the ideal brisket. How anymore? I said, don't know how. I wonder, like, let's say we do want to go back into the range a little bit. Where would equilibrium be? Equilibrium is the 2-minute consequent encroachment. What the? What? Look at that. I mean, come on. That's what I speak of when perfectly perfect. So at some point we may want to get there, but let's see what a 2 minute's looking like. There's no inefficiency here on a 2 minute, which makes me think, right, we should be able to kind of push under the 1 minute. Mm-hmm, mm-hmm, mm-hmm. 30-second break in structure. Yeah, lower time frames will break structure all day. Really gotta know what you're looking for though if you're trying to use them. So we got equal lows here. We get back underneath the old daily high after clearing a weekly level. Right, we barely kind of got into this, so we have the opportunity to run into the consequent encroachment of that. Mm-hmm. Hey, there we go. Little top step action. That's hype. That's hype. Got one back. Let's go. I mean, not yet. If you just got it though, you have to do it a few days, don't you? They're not like Apex, unfortunately. Can't just full port, man. They're whack. Oh, okay, okay. So at the same volume imbalance that we used to go long, I kind of want to see if we can use that to get short. But we'll see. Oh, bet. Okay, hell yeah. Good shit. Oh, I see, I see. Yeah, trailing stop loss is tough. So I gotta be quick with it. Or where you gotta have those statics. But if you get those, you gotta be real precise because you can't lose many trades initially. Once you get it above, you're chilling because it never trails the drawdown, but so at this point we're just chilling. Oh, for me, I just like the volume and balance, really. That's all. I like the level itself. But volume and balances tend to hold bodies more often. So if I'm bullish, or as we mentioned, I just wanted to get in on that volume and balance. I believe I got shorted. Oh, I was like, what? I believe I got shorted. I thought someone was playing me. We did run these equal highs though. So right, we hit that consequent encroachment. At this point, this is where you'd want to see price break through lows. And kind of return into potentially a deeper just discount here, retracement. I'm trying to see if there's not really any untouched inefficiencies until the 5 minute here. So on the 2 minute, right, we've hit that. This is one here. We'd want to see if price can get under that though. Nice. He said, how'd you know I got short though, bro? I was short. Not anymore. I'm out. So I got out at 5 handles there for my entry. I just captured 5 handles today. Right near equilibrium. That's really all we were aiming for. Oh my gosh, I missed a swing low again, brother. That's the one thing that gets me pissed. I hate not catching swings. Come on. All right, so once we 1, 2, 3. We can just run through it because that'll be done for the day right there, probably. Right, first entry comes off of volume imbalance. So we hold the 2 minute. Let me move this. We hold the original 2 minute fair value gap here with bodies. Expand up and through an inversion through a short-term high, creating an inversion volume imbalance while breaking structure. We use the volume imbalance to get long, targeting first the old daily high and then just 5 handles, which is the weekly high as well. So we hit that weekly high. While we're doing that though, we're now creating 1, 2, 3 drives into a weekly liquidity level. Okay, so we would expect at least some type of short-term retracement. Now we're just waiting for an opportunity, right? We get that here in the form of this YouTube model. Short-term high cleared, we then break structure at the low. Entry comes right on the fair value gap, right? So it's paired with our inversion volume imbalance. We enter on the fair value gap. Could have added again, but I was fine with just 1. And now we're targeting 5 handles, which right aligns with the original start of the 3 drives pattern. So we're starting that here, 1, 2, 3. On the way down now, right, we would target the lows, low here. Gets taken. Missed a swing low. Heartbreak. That's all right. So far, pretty clean delivery today. Interested to see what we do here. Right, this is once again the 4-hour fair value gap. Oh no, excuse me, 4-hour wick, consequent encroachment. And then maybe go lower. You still could short it. I mean, I could. I don't feel any need to. He said my dude got short. No, I did tell you. No, not really. I gave you the setup. I said I don't want to see that hold and deliver us lower into lows. You should read my mind, brother, by now. Come on. No free entries. What's this? Signal service. Right. Only went in with one this last one. So as I often say, I go in with less risk on the second trade just because in case it goes wrong, not trying to give it back. That'd be goofy. That's pretty interesting. I'd watch to see if we're going to use that to propel us now. If we're going to close above that, consequent encroachment with volume imbalance. Consequent encroachment act as support, close us above the fair value gap while creating a volume imbalance. New discount to use as we maybe return for the highs again. Mm-hmm. 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 Discipline. I mean, I'm like this here, right? Very intriguing to me, we'll say. We're not gonna take it. We will not. Because we're content, right? Discipline prevails. But something like this right here, this would be like a setup I would target. If we're gonna hold this and go for buy side, using the volume imbalance as we left the inversion fair value gap. stop under a swing low underneath the inversion fair value gap, 2.5 handles. I like that. You caught the 1021 one, 1021 one. Clean. Yep, that's clean. Running the equal highs, returning into consequent encroachment. Textbook. Right, confirmed YouTube model. I enter before the confirmation of the YouTube model because we don't actually close below. Right, so I enter on the wick, simply understanding the volume imbalance here will hold us. If you want to wait for the confirmation, this candle is the first one to actually close below the swing low. Then, right, you could use the fair value gap or consequent encroachment. As I mentioned, now this right here, I'd like that as an entry for sure. Right, we would have been entered right on that inversion fair value gap. So because the volume imbalance and fair value gap are there, just use the fair value gap. Let's see, we overtook. What's my mouse? There it is. Overtook consequent encroachment. This is kind of where, right, if this volume imbalance can fully negate it, we'll give it the one candle chance. But we would need to get back above this. I don't like that we close below the volume imbalance and the consequent encroachment of this fair value gap at the same time. Right, holding the old daily high like that as well. So I'd want this to fully negate, which we did. Okay, so we have one candle chance, works out. Once again though, we hit the high of it and we open immediately with a bearish volume imbalance. So we've opened with back-to-back bearish volume imbalances. This one gets kind of negated. For me, to be honest, if we were going to hold this, I wouldn't want to see this low hit. So if we're going to expand higher, wouldn't want to see anything lower than this candle's low, or else we're probably in danger of losing this fair value gap and attacking this low here. But that's why, right, stop would be under a swing point here that's underneath the inversion. But in this case, this is where I'd kind of mitigate my loss, so I would move my stop to really that swing low here, right underneath the or right inside the fair value gap. Nice. So at this point, because we have actually, right, on the 2 minute and 1 minute, let's see. Yeah, we've returned into consequent encroachment on both the 2 and 1 minute fair value gap. That's right here. So I really wouldn't want to see this low be violated, especially since we closed back above, right? We should expand. Buy side is here now. Really, my target would just be still that weekly liquidity. We can tend to interact with that a lot, right? Play around that level. And this is right here, right? That one candle chance I often speak of. It's simply when, for those that may be confused of it, if we close below a premium and I see that this candle kind of trying to get back above it, if this very next candle can really retake that, right, I'm okay still trusting the setup. To whereas where normally, like if this candle wicked and still, right, held underneath the volume imbalance and left that open, then at that point we're in danger. I really like to see how that volume imbalance though, it didn't even go lower. So that right there was telling, and then we close on the high, right? So this was an extremely 100% bullish candle. Open, didn't go any lower, closes on the highest high it created. So right, while overtaking the broken discount. And now that candle has created a fair value gap. So for me, right, we can play in here, maybe this volume imbalance, but yeah, I wouldn't want to see much lower than the volume imbalance. If we're going to get here, right, we could always consolidate and just kind of head into 11 o'clock without doing much. But let's see if that could hold us. They don't love it. They don't love it. So again, we're kind of creating that same pattern. This right here is just tipping off more consolidation, really. Right, so we've kind of already hit a weekly level on a Monday without any news. So it's already kind of surprising we've moved that much. So I wouldn't really be surprised to see price kind of gravitate around, right? That's the old daily high, the weekly consequent encroachment. So we have some opportunity to just bounce around here for a little bit. Yeah, they could have done that. You never know what retail's thinking. They always be doing some weird shit. Da, 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 da. I mean, I would probably say no. I don't think they would really know or care. You just wouldn't be able to have them synced together. So you just have to, trade them separately all the time. Yeah, I'm not sure what an AMD model is, brother, but it sounds legit. AMD. AMC? Movie theater? Accumulation. Okay. Yeah. accumulation is printing. I agree. Oh, okay. Yeah, I don't know if I've heard of that model before. I mean, if you're referring to power of 3, that's kind of basically what that is, but oh, okay, that makes sense. Yeah, power 3. Try it. Let us know how it goes. I said you hop in first. I got my bread for the morning, so I'm watching. Getting a little close to 11 as well, so yeah. I'm content, right? Honestly, I would probably close it by now, but since y'all are here, we're just chilling. Right back into that old daily high. And it goes like this. Do you have a range trading strategy? If we're within the range, yeah, just look for runs on liquidity. Right, so if we're consolidating, just wait for a run on liquidity, look for a reversal to go back into the range. If we're consolidating, we tend to revert to the equilibrium, back and forth. Right, so in that case, we don't really, unless you can obviously spot a setup, I don't want to be trading within the middle of the range. I want to be trading the extremes of it. So gravitating back for the old weekly high, trying to get there. Shabba-da-ba-ba. Shabba-da-da. 9:45. 9:45. Just a time. I was like, what? Oh, yeah. I was like, what? Yeah, we're holding that. Bissy. Sibby. You know, that's one thing I never really picked up. I don't know why. I just call them all fair value gaps. Easier. Hello, miss. Little miss thing. And go like this. Slow and steady, slow and steady. Right back into the old liquidity, random reaction at that level. Could not have seen that beforehand. Bow, 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 bow. Second standard deviation of the breakaway. Is it still breakaway? Yeah, we never get into it. So still measuring gap. Hey. Yeah, cats are chilling finally. Think they're sleeping. Hopefully. They stay fighting. I'm like, bruh, for what? What is the reason? Nice. So there is the buy side, right? So this trade here would have taken a lot longer to pan out, which is what we're okay with that, but we would have just got to 5, so that inversion holds us. Never get into the low, never threaten the low underneath it. Spend some time top chopping, but then we get into that buy side we were looking for there. So far, pretty one-sided. We like to see that, especially higher. Right, we want price to continue to kind of push higher. What? Better action than Friday. Yeah, man. Fuck Fridays. I hate a Friday. I'd rather trade a Monday over a Friday any day. Seek and destroy. Nah, this isn't seek and destroy. This is just trending higher. Consolidation to expansion to a short-term retracement to continue to deliver into buy side. Right, seek and destroy would have cleared these lows and then cleared this high and then came back down to clear some lows and then clear some highs. Whereas in here, we're just respecting discounts, although, right, slower delivery, retesting discounts multiple times, discounts still holding, not breaking until we expect them to. And then as they get overtaken and turned back into discounts, right, still hold. So just trending higher. Bearish negated volume imbalance as we break through and high, leaving behind a fair value gap. That's a signature we would look to support price. So maybe we hold there, get into the second standard deviation of the 5-minute measuring gap. We'll have to see. So we're getting into the low of it. I mean, actually, right there. Close on the low, open with the volume imbalance, so wicks can go lower, bodies tell the story. See if the body holds it and expands. You have 930 longs in profit still. Yes. For sure, yeah. Probably took high partials. That'd have been the ideal entry. Just use that new week opening gap and hold it up into the weekly high. Clean. All right, we're looking for this level right here. Let me just go. All right, we hold this. That's what we want to see there. As we're mentioning, the volume imbalance. We can wick lower, but the bodies hold that perfectly. So at this point, that volume imbalance here should hold us. Wouldn't we want to see anything lower than this low if we're going to expand into that target? Yeah, possibly. You have to wait for more price action though to print. I'd only look at SMT unless we have a confirmed shift in structure. So it's not something I'm really paying attention to too often. Unless I'm already looking for price to go lower, then I'll use it as like a confluence, but it doesn't really deter me from ever holding a trade or anything like that. Would I consider the 10-10 candle high as a high probability breaker? I mean, from this low probably. Yeah, I'll do that. I'll label it as one. Especially because it's in line with the weekly level. And you can take a few lows, right? I'd probably take like this, these equal lows here, up into that high. So from this low to that high, down to this low, right? As we clear through that high, doing it with the fair value gap. Then you can look at that candle there, this one. Oh, like these. For now, continuation higher. And really, what's this high at? Yeah, if we're gonna get up there, I really wouldn't want to see much less than this high. That is the old volume imbalance anyway. Right, the actual wick itself. Because we spend a lot of time back and forth, so this should be balanced, right? From this like low to this high. When we create this high and trade lower, we come back up to now retest this inefficiency in this one. Those were the only two left behind, and we go through them multiple times, right? Up, back down. When we get into this one, right, we go up into it, back down. So once we finally break that range, this should be balanced, which is why the most recent discount here, if we were going to go lower, is why we would expect that to hold us. We shouldn't see any deeper retracement into any of this because there's no discounts here. So that holds us, gets us above the high again with the volume imbalance. So at this point, wouldn't want to see anything less than that volume imbalance, and that's why. Keep us right, basically running higher, down close candles, supporting price at this point. Well, we see that there. See if we can't get into that deviation. I'm like, we don't really have, what's in there? There's a 4-hour fair value gap. There's a 1 hour fair value gap high right here. Let's try that. So that level that I just pulled up, 1 hour fair value gap high. But then we have a volume imbalance. And another. And then this is the next fair value gap. So we got 1 hour fair value gap high, volume imbalance on a 1 hour. So this is a pair. And then that's the next 1 hour fair value gap. So just upwards targets. Right at this point, we look for now new discounts to hold. As we continue into our objective, volume imbalance entry. Ideally, you wick into this and then reject, leaving the volume imbalance open. Instead, we negate it, we close it in, but then we open with a bullish on the hidden volume imbalance. Right, so we'll give it the one candle's chance. This candle here, we need to expand up above these levels, get up and through it, reach into the second standard deviation. We left consequent encroachment though, so I mean, if we don't get up and through it, maybe tap consequent encroachment. But ideally, we just kind of push. You like it? Hey, I'm glad you like it. It's honestly something that is pretty, I wouldn't say, within the last 6 months I've started doing, or just realizing, right? Because for a long time, oh yeah, I mean, look at that. Look at the tap. What do we hit? We hit that to the tick. And now we get through it. There's the 1 hour fair value gap. But yeah, a lot of times, right, it was something that I noticed where, say something got disrespected, oftentimes the next candle, if we were still really bullish, would kind of make up for whatever the previous candle did. So we've seen it a few times already today, right? Kind of like here as well. Like I still have that same idea where I didn't want to see us close below consequent encroachment, but the next candle gaps it right back up to that fair value gap. So we're giving that a chance, so it continues to run. But there's that 1 hour. So yeah, it's extremely bullish today, really. Nice to see. Just continuing to push. Right, we call this out here. Am I upset that we didn't take it? Not at all. There will be another trade tomorrow, and then the day after that. And then on Friday, and then on Monday and Tuesday, and then on Wednesday, and then that next Thursday. And then the next Monday as well. And I think that next Tuesday will also be a trade opportunity. Take care, Verge. Yeah, at this point, right, morning's done. I mean, all of our targets have been met. We can continue to push, but I mean, look at this though, right? This is what we love about the price. So we wick into the high of the hourly. What do we close on? Oh my goodness. Random level? No. We close on the second standard deviation of the measuring gap. Right, that's the power of measuring gaps here. They're really more targets. They're not entries. They're targeting techniques. They give you projections to look for. And I mean, that's nice. This here is that volume imbalance where we didn't even make an opportunity to go lower. So right, this is an extremely bullish signature. So if price wants to continue running, this one will hold. He said trendline formation. This guy started trading other accounts, was too aggressive with trailing stop loss. You got stopped out, you're saying? Shame. What'd you get stopped, brother? You should have just been following structure. Dang it. Oh, 500? Okay, you're good. I was like, but say you entered here, right? Like I would have mentioned. My stop technique, we enter here. We create that low. My stop would have been right underneath that. We get close, we don't take it. We break high, stop still there. We now clear an inversion. Boom. We close above it here. And now we break through this high here. Right, so we've broken through highs. Stop now goes under the inversion. We then trade back into a discount, break structure again. Stop goes under the swing low. We then trade back into down close candles, break structure with a new discount. Stop goes under this swing low. We now institutional order flow entry. Because consequent encroachment was never touched, I still go stop here. Because we may get something where we wick into this, just a wick, and continue to run. If this holds like we want to see it though, and then we continue to push, stop would actually get put here. This would be institutional order flow entry drill. Oh, NQ. Yeah, I don't fuck with NQ. That's fair though. Hey, still profit. Still profiteer. Daily fair value gap high as well. Right, all lining up. From the 29th of August, that fair value gap high right here, right on this level. So I mean, god dang, brother. Right, you're starting to really see the narrative being painted live action. I mean, right here, what did we say? Extremely bullish. Once again, wicks go lower, that's fine. Bodies tell the story. Because in theory, right, this is like the volume imbalance fair value gap. But notice how the volume imbalance and pair it with the fair value gap. The fair value gap consequent encroachment is the volume imbalance exactly. This candle goes back into the hidden volume imbalance with the wick, but the body holds. Then we expand into equal highs. When you spend enough time watching price, it's just undeniable how the algo be. The algo be algorithming. I favor ES because it moves more predictably. I started with NQ because it moved more aggressively. But honestly, I realized you don't need the aggressive movements because I can capture, right? I can be more precise in ES, basically. Short term, or the short answer. Whereas we can still trade NQ for sure, but right, NQ is a lot more aggressive. It rips a lot quicker. It just moves quicker. ES a little more methodical, a little more precise. Yeah, I started with NQ because I was like, right, my thinking at the time was, okay, I don't necessarily trust my trading abilities as much, so I need to catch larger moves so I can make more profits. Right, that really was my kind of philosophy. To where NQ, when it moves, right? It rips. So you can capture more. So I was like, okay, if I can capture more, I might as well do it. But now I realize, nah, I'd rather be more precise in and out. I don't really hold for long moves too much. Every now and then we'll look at NQ, but who knows, maybe we'll go back to it one day. Just do an NQ stream. So boom, look at that. Algorithmic. Equal highs, 2 standard deviation, 2 equal high, to candle close. Open, high, low, and close. That's all we ever need, really. Turn this into, what are those one? Bars? We could trade like this. Nah, that's actually crazy. What the hell? Could you imagine trying to trade like that? Fair value gap. Yeah, that's how Michael learned too. That's what's crazy. I was like, we take it for granted. They didn't even have candlestick charts back then. That'd be interesting. What are hollow candles? Line. Imagine trying to trade. Now that would be crazy. Just trade straight like this right here. Some people be doing that though. It's weird how there's so many different ways to look at price. Like people could never understand how to read a candle. Like this would look foreign to them. Or it's like, what is this? Some people be using this. Haikanashi. Oh. Whoa. You can't use the rank code. My fault, my fault. Oh my god, what's happening? We're just creating the worst charts you can ever imagine. Like, how would you even interpret this? What in the hell? Up close candles. Down close candles. Look at that. Just bing, 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 hitting that high. Look where we're closing, though. We're closing on the hourly. Oh my. Yeah, that's my secret right there. You guys don't know, but on my other screens, I have every single one of these open at the same time. And when they all emerge for one trade, GG's. That's the mega trade. Point and figure. I can't use that one. On the intraday. It looks like football. Oh, this one's interesting. Breaking structure. No, this one kind of goes hard, to be honest. Hold up, look. If we just make him black, make them all black. Thick bars. Nah, this is a foreign language. What the fuck? There's some hieroglyphics. I guess though, let's see. Fair value gap. I'm just trying to even find fair value gaps in here. Okay, I see. When they're like that. So this is a fair value gap right here, right? That should be a fair value gap. Is it? It wasn't. What the heck? Who knows? Yeah, at this point, we'll just fucking run. Right, you guys can bounce. We don't really have any other bias or anything. We've hit all our targets. Extremely bullish day. I will be honest, I was not expecting that. So I'm fortunate that we had the stream today because we were able to make some bread, baby. I would have expected Monday would have probably kept within this range here. And then Tuesday or Wednesday we go for it. But nope, Monday went right for it. Which does make me think now maybe Tuesday, Wednesday is a little less active, right? Tuesday FOMC minutes, so Tuesday morning can be lackluster. Wednesday, the day before Thanksgiving. Thursday, obviously Thanksgiving. Friday, the day after a holiday. So that's maybe why we saw actually Monday move aggressively for that. Right, we speak sometimes of if we have a shortened trading week, everything happens a little quicker. Right, so as you may have wait for Tuesday to kind of create an expansion into a range because we don't have as many days in the actual week, Monday can tend to do that. Cats are excited. You can hear them again? Yeah, they be fucking... I have a bigger cat, right? Because I got a kitten, and he be bullying her, bro. He be biting her body, shaking her shit. I'm like, yo, you about to end her. Chill out. He be going kind of crazy. It's going to be low probability tomorrow before. I would... Yeah, I would say so. Especially now seeing how Monday moves so much. Especially if we keep moving, right? We still have all afternoon. So if we continue to push into the afternoon, then Tuesday more than likely will just consolidate. Which we'll have in the free stream tomorrow, so that'll be a little lackluster for them, but hey, they're bad. Y'all got the nice sauce today, right? Ended up being a pretty great stream overall. Yeah, we'll just do Tuesday, Wednesday. Obviously Thursday off, Friday off. It is a high, it's a breaker, yep. Low, high, lower low, broken. With the fair value gap. We use the fair value gap to get long. Breaker though as well. Here, wick into the breaker, hold the fair value gap. Get out, 5 handles. Second standard deviation. Yeah, we'll run through the entries one more time quick, I guess. At this point, clear all this nonsense here and here. Bang, bang, don't need that or that. Boom, 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 boom. Whoa, that's not right. So we wick into, oops. Let me change it so you can see. So all we had for today was, wait, there it is. Cool. All right, so original longs, as we mentioned here. We were waiting to see if price wanted to continue to expand. So we were holding this 2 minute. Right, we understand if we're going to hold the 2 minute, candle bodies respect it. We're pushing up and through, creating a balanced price range, right? We're negating old premiums. So if we're pushing up through old premiums, they should become discounts. We then close above here, creating the market structure shift as well. This level is, oh my goodness, wait. Okay, it's whatever. It's the wick of, wait, what is this level? No, I'm tripping. What the hell? Hold up. So you got me. Okay, I was like, what? So that level, yeah. This level was the consequent encroachment of the wick. All right, so as we're hitting it the first time, we have a chance of rejecting. So we need to wait and see. We come back down, we hold the 2 minute discount. So now as we break through it, then we're confirmed to go ahead and look for longs. That's why we feel comfortable entering, right? We're breaking up and through that consequent encroachment. We're breaking through highs and we're holding discounts. So now we get in on the volume imbalance, right? You could have used the 2 minute, you could have used this 1 minute here, really personal preference. I just like volume imbalances. So we use the low of that to enter. And then we simply were targeting this level here, which was the previous day's high, and then the weekly high. So we get out at highs, we create the 3 drives at a weekly level. We're kind of expecting a slight retracement at this point. So once we put in that bearish structure, leaving behind a new premium after clearing a short-term high and a weekly high, we're confident shorting that, at least back into the range here. We notice that there were equal lows. So where we enter, we form equal lows, right? Circle of life, we come back down to now take out anyone that entered with me and still had their stop there. Right, so we then pick up those stops, and that's where we exit. So overall, nice morning from there. Right, we called out the inversion setup here. Didn't engage on it, that's fine. But if we were going to overtake this, we understood targets would now start resuming for buy side. Right, we wanted to see that second standard deviation. That was really our target. Hits beautifully, closes on it, and now we consolidate around it. So overall, pretty clean morning actually, right? A little cleaner price action than I was expecting, but that's all good. We take advantage of it, right? As soon as we see it occurring how we would expect, we're not hesitating on it or anything. We trust price, and it pans out pretty well. Going forward, this 15 minutes interesting. If we can push up and through the volume imbalance, I honestly think we can continue to push higher, right? So that's, if we do that into the afternoon, then I think tomorrow morning will be a little more lackluster. If we break underneath this newest formed 15-minute here, so if we get candle bodies to close underneath that, I think we could return for this breakaway. Kind of, right, I guess, meander back into that old daily high, kind of into the equilibrium of the new range that we formed here. So that's what I'd be looking for. But overall, still bullish though. So we continue to look for higher prices. Can you show your fib setting levels for your fib tool? Oh yeah. I got a few different ones though, I guess. So it depends on what you're looking for. Like I have different templates. Is there a specific one in mind? Do I journal my trades? No. I used to do every trade, but now not really, honestly. I have them, they're like obviously recorded so I can look. But as far as like going in and marking them up, I don't do that as often anymore. Mostly because I do the recaps. So like when I'm doing the recaps, that's my journaling at this point. It's more of like a live video journal. The main fib. Well, my main fib is for, I don't really use the main fib as much because it's for OTE, which I don't use anymore. The only ones I do use are the midpoint, which is, right, that's obviously just 50. And then for my consequent encroachment levels, like if I'm doing the anatomy of a fair value gap, right, or anything really, any PD array, it's these levels here. So I go a quarter at a time, starting from 0 to 1. So 0, right, quarter, half, 3/4, 1. And then the other one that I have is the projections, right? And with this, I just do 1 at a time. So 1 standard deviation each time. So -1, -2, -3, and then 1, 2, 3 in the opposite direction. You could always mess with that if you want to add like the half standard deviations as well. For me, I don't necessarily do that. Cool. Yeah, no problem. And I guess if you did want to look at the OTE, right? I could just share it anyway. The OTE level is the 0.79, 0.705, and 0.62. Those are the OTE levels. The golden zone, right, that Michael taught, is the black line that's in between. So the white lines I have here, wait, let me get it in a better spot. So these white lines, you could probably barely see them. These white lines I have here are like the entry of the optimal trade entry. That black line right in the middle is his actually like sniper entry spot. So that's what we would actually kind of be looking for. But this is just the zone for it as well. But yeah, that'll be all. Appreciate y'all sitting in with us this Monday. Panned out well, so it was nice to be together for that. We will be back Tuesday, so tomorrow morning at, right, we have high impact news tomorrow at 10 Eastern. So we'll start a little bit later, 9:55 Eastern will be the start time for tomorrow. So until then, have a good day, everybody. Be safe, and we will talk in the morning. See you guys.